Page 107. Taxation laws. Taxation law. Taxes are of the utmost essence, because the government shall use them in developing the country, and it is certain that, according to natures of human, no one desires to make the payment without tangible return. People who pay taxes may perceive that they do not directly receive any benefit in return. Therefore, certain people avoid tax payment. Thus, it is necessary to have law on taxation to control tax payment, and the agency directly responsible for collecting taxes is the Ministry of Finance. Taxes are divided into the following taxes. Income tax means the tax collected from the taxpayers, which are classified into two categories, namely, personal income tax. It is the essential source as collected by the state from the taxpayer who is a natural person, an individual, unless as particularly exempted by laws. The personal income tax base is called net income, meaning income tax less expenses and allowances. Personal income tax rates are progressive. That is to say, the more taxable income, the higher tax rate. In this respect, the maximum tax rate is 35% of net income. The maximum tax rate may be subject to change if the personal tax structure is amended. Corporate income tax. It is the tax collected from juristic persons, for example, limited partnership and limited company. Value-added tax. It is an indirect tax which can be pushed by the goods manufacturers or service providers to consumers at the rate of 7% of the goods and services prices. Excise tax. They are specific sales taxes as collected from certain categories of goods and services which are reasonable for the consumers to bear the tax burdens more than normal taxes. For instance, the goods which, after consumption, may cause danger to health and good morals. Extravagant goods. Goods with special benefits from the state. Goods causing burden to the government to construct a variety of facilities to provide services to consumers, or goods causing pollution to environments. The Excise Department has its core duty to collect taxes from specific goods and services from the goods manufacturers. For instance, liquor, cigarette, air conditioner, chandelier, glass, crystal, perfume, yacht, and cards. Custom tax means money or properties collected by the state from importation or exportation of goods, or means money or properties collected by the state from bringing the goods or properties from one territory to another territory. The custom taxes have no exact rates, depending on the fact that if such goods have been imported and exported, whether they affect domestic economy or not. For example, if the goods have been imported and have inexpensive prices and have been dumped in the market, the domestic goods manufacturers could be adversely affected. Accordingly, there must be taxable measures to make the import goods prices higher, called tariff barriers. After establishing tariff barriers, the imported goods so purchased in department stores in the country shall have prices higher than those purchased abroad. Thus, there is contraband smuggling.